Most people believe in the sweet lie that when the U.S. Federal Reserve, or the Fed, cuts interest rates, the dream of homeownership will instantly be within reach. But if you are standing in the middle of glamorous New York City waiting for a miracle from the Fed chairman, you are playing a gamble where the house has already secured the win. Welcome to the dark side of the real estate market, where the biggest financial decisions of a lifetime are completely dictated by psychological errors. Look at the magnificent skyscrapers in Manhattan, where thousands of high-income earners are imprisoned in their very own luxurious apartments. They are the perfect victims of the psychology of money, a science that explains why incredibly smart people make incredibly stupid financial decisions. Society brainwashes us that buying a house is the ultimate milestone proving you have succeeded in life. So when you earn a massive salary on Wall Street, an invisible pressure forces you to own a property worthy of that title. You walk into a flashy real estate office in New York carrying a desire to assert your status rather than a sound financial plan. You are not buying bricks and cement, you are buying a phantom painting of safety and social class. But this is when the brutal truth of the financial market delivers a fatal slap to your face. People glue their eyes to the television screen, holding their breath following every word of the Fed and celebrating when they announce a short-term rate cut. However, a week later, you walk into the bank to apply for a mortgage and are shocked to realize your home loan rate hasn't budged at all. The reason is because the Fed actually does not directly control your 30-year mortgage rate like the media preaches every single day. Your home loan rate is tightly bound to the yield of 10-year government bonds, which is entirely determined by global market supply and demand. When massive investors from Tokyo to London sense inflation risks, they will demand a higher yield to buy American debt. And when long-term bond yields stay high, banks will immediately push all that cost burden onto your mortgage contract. The Fed cutting short-term rates at this moment is like you trying to put out a roaring forest fire with a single glass of water. Ignorance of this ruthless mechanism is the exact fatal flaw that behavioral finance has exposed for a very long time. We humans suffer from a deadly psychological trap known as the anchoring effect. Your memory has been nailed to the rock-bottom 3% interest rates of the pandemic years, causing your brain to automatically refuse to accept the new reality. You look at the current 7% interest rate and feel like you are being blatantly robbed in broad daylight. But instead of stepping back and calculating feasibility, personal ego and peer pressure in New York push you to jump straight into the fire. Your coworkers are bragging about their newly purchased apartments in Brooklyn or Tribeca, creating an intense fear of missing out. So you blindly sign a massive debt contract, deluding yourself with the mantra that you should just buy now and refinance later when rates drop. Congratulations, you have officially signed your life away to the meat grinder known as the American banking system. This machine does not care how smart you are or how prestigious your title at your corporate company might be. It only cares about what percentage of your labor energy you are willing to sacrifice every month to pay tribute to them for the next 30 years. Once you hold the keys to that luxury apartment, the psychological Diderot effect is immediately and ruthlessly activated. Your old college-era sofa suddenly looks incredibly cheap and ridiculous when placed in your brand-new marble-floored living room. You immediately swipe your credit card to bring home an Italian designer furniture set to match the caliber of the house. Then you realize the curtains, the lighting system, and even the car parked in the garage also need to be upgraded to create perfect harmony. Every single cycle of impulsive shopping tightens another iron chain around your financial neck. Your income in New York might be in the top 1% of the nation, but your actual cash flow is as dry as a barren desert. You are living a royal life on paper, but are actually just one layoff notice from human resources away from total and complete collapse. This is exactly the phenomenon of high-income ghosts that the psychology of money frequently studies and warns against. They wake up every morning in the most expensive apartments in the world, wearing $1,000 suits, but carrying an absolute terror of bankruptcy deep inside. Their entire energy and youth are drained just to maintain the illusion of success in the eyes of total strangers on the street. Meanwhile, the true elite are sitting in dark rooms on Wall Street, smiling and sipping wine while observing the behavior of the herd. Their computer algorithms do not analyze the value of homes, they analyze the desperation and greed of the homebuyers. They know exactly when you will lose patience, when you will abandon logic to dive into loans way beyond your ability to pay. The financial industry has built a perfect psychological maze to ensure money always flows from the pockets of workers to massive investment funds. The media and Oppo's constant reporting on the Fed and Oppo's moves is nothing but a carefully orchestrated puppet show meant to distract your attention. They want you to believe this system is trying to save you, when in reality it is designed to erode your freedom down to the very last penny. True wealth is never measured by the square footage of the house under your name or the prestigious zip code you happen to possess. In the psychology of money, wealth consists of intangible assets that nobody can see, which is absolute freedom of time and peace of mind. It is the investment portfolio quietly generating returns, and the cash reserves large enough for you to confidently smile and walk out of toxic work environments. But instead of choosing freedom, the vast majority of people manually lock themselves inside a gilded cage using a mortgage deed. When the New York job market shakes and waves of layoffs sweep through major corporations, that golden cage instantly turns into a financial coffin. No Fed rate cut is fast enough or strong enough to save someone who is already drowning up to their neck in the swamp of consumer debt.
The real estate market is a heartless machine, completely ready to crush all your dreams and throw you out onto the street without blinking an eye. Being aware of the deadly blind spots in your behavioral finance is the only shield that can protect you from the manipulation of this system. You must learn to ignore the empty cheers of society and independently redefine the concept of prosperity for yourself. Do not buy a house just because you reached the age where you are supposed to, and absolutely do not borrow based on vague promises of lower future rates. Patience and iron discipline are the ultimate weapons that amateurs constantly despise but professionals deeply worship. In a noisy world that constantly urges you to consume and show off, keeping your money tightly in your pocket is the proudest act of rebellion. Let those desperate to prove themselves rush into the bidding wars for cramped apartments in Manhattan at exorbitant prices. While they are drowning in the sleep-depriving pressure of debt repayment, you can peacefully build your own financial kingdom using the bricks of knowledge. The truth is that no external force can ever rescue you from the disastrous decisions created entirely by your own unchecked greed. Central banks will only act in the interest of macroeconomic system stability, never for the fate of your personal checking account. The battle for financial independence has never taken place on trading floors or inside the boardrooms of the ruling class. It is a silent but fierce war happening every single second right inside your own mind. Do you have the courage to control temporary desires and defeat the inherent weaknesses programmed directly into your biological DNA? Will you become a wise investor who fully understands the rules of the game, or will you forever remain a sacrificial pawn on the chessboard of the elite? This game of capitalism is incredibly cruel, but it is also completely fair to those who are willing to open their eyes and learn. Look deeply at your current liabilities and ask yourself if you are buying actual comfort or just purchasing fake external validation. If you are still waiting for the Fed to cut interest rates to solve your personal financial problems, you have already lost before stepping into the ring. True power does not reside in pieces of paper money. True power resides in the ability to control your emotions and behavior against financial temptations. Tear down the blindfolds, face the naked truth of the market head-on, and start reprogramming your entire mindset today. Escaping the trap of mob psychology is the very first and most important step on the journey toward reaching authentic freedom. Do not build your life based on delusional macroeconomic predictions, build it on the solid foundation of an unshakable psychological root system. The next time you see a breaking news alert about interest rates, just smile and swipe past it, because you know it is nothing but meaningless noise. Your financial picture is painted entirely by your own disciplined decisions every day, not by the charity of anyone else. Life is a constantly moving current, so master your cash flow instead of letting it drag you down to the bottom of despair. It is time to wake up from the sleepwalking of modern consumerism and take back absolute ownership of your own destiny. The choice to be the prey or the hunter in this concrete jungle is a decision that rests entirely in your hands.